I'm Marie Humphrey, Educational Programs Leader for Performative, the largest online community for corporate finance, accounting, treasury, and related professionals. I'd like to welcome everyone to today's webinar, Unlocking the Power of Financial Consolidation Functionality. Financial consolidation software can help your company effectively navigate multiple currencies, mergers and acquisitions, and evolving accounting standards and regulations such as IFRS and GAAP. Today you'll discover how companies are leveraging SAP Business Planning and Consolidation software to deliver fast, accurate financial consolidations and liberating their finance teams to focus on strategy and analysis. I would like to thank SAP, whose commitment to thought leadership helps us make this webinar possible and delivered at no cost. A quick note on today's agenda. First we'll hear a presentation for our featured speaker, then we'll move to the interactive Q&A session where we'll spend the remainder of our hour. We would like this to be an interactive experience for you. So if you have any questions at any time, please go to the questions area in your GoToWebinar control panel and send us your questions. We can't promise to get all of them in, but we will do our best, and we'll follow up afterwards with any questions we did not get to. A few logistical notes about the webinar today. A link to today's presentation and video recording of the webinar will be sent out to all attendees within 24 hours of the event. Please note today's webinar includes a tech demo and as such is not eligible for CPE credit. Again, we encourage you to ask questions on today's topic via the questions box in your GoToWebinar control panel at any time during the webinar. Finally, you'll be asked to take a short survey regarding the webinar today at the conclusion of the webinar, and we would greatly appreciate your feedback regarding our event today, as we always strive to improve the ROI we offer our event attendees for their valuable time. A quick word about Performative. Performative is the largest online community and resource for senior-level corporate finance, accounting, treasury, and related leaders. Performative connects corporate finance leaders to provide instant advice and insights on the tough financial and strategic challenges they face every day. Let's get started by introducing today's featured speaker, Kirk Anderson, Vice President of Solution Management, SAP. Kirk is currently responsible for SAP's consolidation, disclosure, and notes management solutions. Prior to joining Solution Management, Kirk was a member of the SAP Platinum Consulting Organization, focusing on corporate financial planning. Kirk is a chartered accountant, and prior to joining SAP, worked initially in public accounting before joining the International Audit Department of DART and Craft Industries, where he worked extensively throughout Europe and the Asia-Pacific regions. With that, it is my distinct pleasure to hand the floor over to Kirk Anderson, Vice President of Solutions Management, SAP. Kirk, please take it away for us. Thank you very much.
So I'd like to welcome everybody to our presentation today, Unlocking the Power of Financial Consolidation Functionality featuring SAP. The objective is really to highlight how modern consolidation applications like SAP Business Planning and Consolidations, otherwise known as SAP BPC, can assist companies in achieving a more timely and compliant close, helping to ensure not only that the process is accelerated, but at the same time the information being provided can be relied upon as being complete, accurate, and consistent across both the areas of legal, statutory, and management consolidations. Basically, there are a few areas I'd like to cover during the presentation. First of all, I'd like to start off with just a brief overview of some of the key CFO challenges that are faced today, and those in particular that relate to the area of closing and consolidations. And then we'll look how applications such as SAP Business Planning and Consolidation have been architected and designed to address a number of these key issues. We'll then go into a brief overview of the detailed consolidation capabilities that are there to assist in performing the close and ensuring an accurate and compliant close. And then we'll go into a technical demonstration of the product to highlight and reinforce some of those areas that we've covered previously, followed by a summary, and then we'll go into the question and answer period for any questions which people may have. So one of the key things I think a lot of people find today is that within the CFO there are a number of challenges that they face. Among the challenges that most directly relate to the closing process include a lack of trust in the data and reporting which is being performed. And this particularly comes into play when we're looking at various different types of management reporting as well as legal and statutory, and the challenges that often exist when the information being provided is coming from disparate different systems, such that the results, even though they should reflect common numbers, don't always necessarily do that because of the source of the data. So this is one of the challenges oftentimes today is faced is how do we ensure that whether I'm doing reporting for management purposes, for legal or statutory, I'm working with the same underlying set of data and ensuring that I have common results across all of those areas. Another area obviously is the with respect to the area of the closing itself. One of the areas here is related to the time it takes to do the close itself, and this, of course, is a challenge for most corporations. If it's taking 20 days to do the close, obviously, in particular from a management perspective, this poses a real challenge in the information being provided being timely enough that a company can actually react during the current period and adjust their operations to address the issues that may come out of that reporting. Coping with compliance marathon is another major issue which has arisen. Most companies today face a push for shorter and shorter closing times, but at the same time the amount of additional reporting and so on that they're required to continues to increase. So things such as the XBRL mandate for SEC reporting, the convergence of IFRS with US GAAP and the resultant additional disclosure requirements coming out of there, and then various different regulatory requirements depending on industries such as Solvency II for insurance or FinRep, CoRep for risk reporting in banks, all add a great deal of additional compliance reporting and additional requirements for information, but getting that information in even shorter periods of time. And then probably the other area most closely tied to the close is disparate data and the tool from multiple vendors. So how does the CFO basically gather information from multiple different systems, commonize that data, and then make it available so that we get consistent reporting despite the data coming from multiple different source systems? So the challenge today oftentimes is the result of three primary challenges in terms of the systems themselves. The first relates to the data itself and ensuring that we have accurate and predictable data. So traditionally for a lot of companies, one of the challenges they've had in doing their consolidated reporting is that they're trying to bring data together from multiple different systems, and oftentimes what this is required is the use of spreadsheets where we download the information, we manually commonize it, we then have to email it, submit it to corporate where it's then uploaded into a system, brought together with other data, and then reported upon. And of course all of these manual steps, all of this manual intervention, translation, reentry, etc., can oftentimes not only take a significant amount of time in terms of being able to do the consolidation, but as well it has a significant impact on the ensuring the accuracy of the data. The second issue that a lot of companies face is around the process itself. So almost every company has a closing process where they define the activities that need to be performed, but what they're challenged with is having any effective way of ensuring all of those activities have been performed and have been orchestrated in such a way that we know when one particular activity has been completed and we can start the next activity that follows on from those activities. And then the third area, which has often caused challenges, is in the execution itself, and that is oftentimes tied to more traditional consolidation applications where they have tended often to be quite inflexible, initially designed primarily to support legal reporting, but now being asked to support not only the legal reporting, but the management reporting within the organization. And then the other thing is that they've often been quite inflexible in terms of the use of the application, requiring highly trained system administrators or IT to become involved, even to do things such as adjusting or creating new reports, adding new master data, or any other activities that need to occur during the close. So all of these things tend to be challenges technically which have caused a lot of the issues we've traditionally seen around the consolidation area. This is compounded again by, as we mentioned, the dynamic regulatory landscape, the consistent increase in the demands for more disclosure from various different companies, new directives coming out, new regulatory requirements in various different industries. This is all compounded the issue in particular, as we mentioned, where we need to be able to do faster reporting as we go forward. So that being said, what we'd like now to look at is our SAP Business Planning and Consolidation application, which is one of these more modern consolidation applications which is specifically designed to address a lot of the challenges and issues that we've previously covered in the challenges section. So just briefly, the SAP Business Planning and Consolidation application is essentially a unified application which basically supports consolidations both for management and legal and statutory reporting purposes, but as well planning and forecasting and financial reporting. And what this basically does is it gives us a single unified platform which basically supports external but every bit as important internal reporting by being able to marry both our actual and our plan and forecast data. Three of the key aspects of the application that we'll see as we go through it is, first of all, it is a familiar and easy to use application. And this is really focusing on this concept of delivering solutions which can be owned by the business, easily adapted by the business so that the business is able to more quickly react to changes in reporting requirements, updated master data, things such as that. The second thing is the application is very much designed to be process-centric. And this is really addressing this issue of orchestrating the close process. So one of its key capabilities is what is known as configurable business process flows, which essentially are step-by-step guides which take people involved in the close process through each of the activities that they're responsible for performing. But tied to that is also collaboration, workflow, and approval capabilities so that each stage in the process it's possible to trigger notification to the next party responsible for the next area as to what they need to do, as well as being able to essentially sign off on the activities so we ensure we have the appropriate control around it. And then as we mentioned, the other thing about the business planning and consolidation application is it's a unified application. Again, that means it's unified across the planning and forecasting, consolidations, and full financial reporting area. So the application itself basically provides capabilities which allow us to bring in data from multiple different sources. So I can bring in my general ledger detail, etc., from various different sources, including multiple different ERP systems. I can also bring in certain unstructured data or work with certain unstructured data within the system, for the example, to develop PowerPoint presentations for management presentation purposes that can be dynamically refreshed, being able to author Word documents with dynamic data within them, etc. Then the core planning and consolidation application itself, as I mentioned, a key component is this process management, this orchestration of the activities. Then another key area is automation and then reporting. And the automation is really focused on trying to eliminate as far as possible any sort of manual calculations which might otherwise be required. And this is done for two primary reasons, to accelerate the time to close and also to help ensure the accuracy of the information. And then finally, once that data is made available, then basically the application is designed to present it in multiple different formats depending on the nature of the user looking at the data. And the three key formats that generally the BPC application is designed to deliver information through is the Microsoft Office suite, obviously being an Excel, PowerPoint tools that the business users are very comfortable with. But in addition, also web deployment and also the ability to deliver data through mobile devices, as of course people move more and more to the use of mobile devices for monitoring of data, etc., within the organization. Okay. Now, the BPC application itself is, as we mentioned, a unified application, and it focuses on dealing with the areas of planning, and that includes initial budgeting, but also not just financial statement planning, sales and revenue planning, CapEx planning, various areas such as that, followed on by, of course, forecasting, so being able to take and our initial budgets and plans, etc., marry that with the actual data to date, and then project future results and forecasts from there. Then, as we mentioned, being able to deal with consolidations, but consolidated reporting not only from a legal entity perspective, but very much from a management perspective, and then providing multiple different capabilities in terms of reporting and analysis. And this is really where we're able to marry the data from the actuals that's coming in from my consolidation system with my plan and forecast data within the company itself. Okay. As we mentioned, one of the key things is that the applications now are designed to be owned by the business users. And this is a big change in a lot of the applications where traditionally there's been a fair reliance on highly skilled administrators or IT to do things such as maintaining reports, updating master data, things such as that. The move within these applications is to be able to provide those capabilities so that the business users themselves can own those areas. So if during the close I need a new report to analyze data in a different way, I'm getting a request from management, etc., it shouldn't have to go back to IT or to a skilled administrator or somebody within the business themselves should be able to dynamically create those reports as required. Now what I'd like to go into from there is that basically gives an overview of the business planning and consolidation application, is to just quickly walk through some of the key consolidation capabilities that exist within the application to address a number of what we would call the barriers to being able to do a fast and compliant close. So the areas such as how do we support multiple GAAP reporting within a single application, how do I eliminate a lot of the time spent on intercompany reconciliation, other areas such as how do I further automate the process, so trying to take away all of the manual activities involved in the close, and then of course how do I integrate and automate the passing of data into the application itself. So if we look at the key capabilities of the application itself, the first capability is the ability to support data input of loading of data. And this really focuses on two primary areas. That is the integration and automation of the extraction of the data from the source systems, the commonization of that data, and then loading into the application itself. And with the BPC application, it provides multiple different options for doing that. So for an SAP customer, there is native integration which is provided through the application, which allows me to directly reach back into my ERP or my general ledger system to extract that data, to do any commonization, for example, translation of the accounts from operating to global accounts, and then the loading of that data into the system. We also provide another tool known as financial information management, which allows us to not only source data from SAP sources, but to automate the loading of data from other non-SAP general ledger systems. And then the third capability is the more traditional, where I extract a file and then want to use that file and to upload it, transform or commonize the data, and then bring it into the system. So multiple capabilities exist in order to focus on loading of the data, but the key focus here is on trying to integrate and automate that loading process in order to speed it up, as well as ensuring that we eliminate any manual errors in translation, etc., that might otherwise occur. Second key capability which the application delivers is controls functionality. And what the controls functionality again focuses on is automation. And what this really is the ability to go in and to define, based on a rules definition, various different checks that we want to do on the data as it's submitted. And essentially what this provides us with the ability to do is to go in and, instead of manually analyzing the data that we're working with to ensure it's correct, being able to set up predefined rules that we can run, and then on an exception basis only, highlight those areas where we have issues, and then from there be able to go in, drill down, and identify what those issues are. Now these checks can be of various different types. Obviously there are standard checks such as, is it a balanced submission? Do my assets equal my liabilities plus my equity? But it can even go further than that to defining, for example, checks to show all exceptions where my plan versus my actual data varies by greater than 3%. And all of these things are run natively within the application as soon as the data is loaded into the application, so that I'm immediately able to determine if there are any issues that I need to take action on. And this basically allows us to more quickly address the issues, eliminate the manual analysis that would otherwise be performed, and also eliminate the need for a lot of late adjustments being booked directly to the consolidation application itself. The application also provides capabilities around journaling, so the ability to basically go in and to make any adjustments on the top side that I have to into the consolidation application. So if I do have late adjustments, it provides me with that ability to go in and make those directly to the consolidation application rather than requiring resubmission of that data into the system itself. Another key aspect is what we would call advanced group structure management, and this is the ability to basically go through and define my ownership structures, etc., within the organization under multiple different views. So I have the ability to basically go in and define organizational structures on multiple different hierarchies, unique by various different versions or categories of the data that I'm working with, and on a time-dependent basis. And what this allows us to support are things such as being able to consolidate under multiple accounting principles. So the ability to create one organizational structure where the methods of accounting and so on are defined under IFRS, an alternative if it's different under US GAAP. Another key and very important aspect of this is the ability to support not only my legal and statutory reporting, but using the same underlying base data, my various different management reports. So the ability to go in and define one hierarchy by ownership structure, another hierarchy, for example, by lines of business or segments, another by region, and then being able to use the same single set of underlying data to consolidate and roll up under all of these hierarchies so that I can support both my legal and management reporting, but always using the same underlying data to ensure I have consistency across the data. Currency translation, so again, the ability to automate all of the translation in accordance with generally accepted accounting principles for currency translation, including the ability to submit the data in local currency, to analyze in local currency, but then to be able to consolidate and report under multiple different group currencies. So if I have IFRS requirements in Europe, the ability to consolidate under not only under IFRS but in euros, where under US GAAP I would alternatively perhaps do a consolidation and be able to report those same results under US dollars within that other alternative view of the data. As we mentioned, one of the key things with the consolidation applications in order to both reduce the time to close and reduce the risk of errors is the whole concept of trying to automate all of the calculations and postings that a consolidation requires. So this is just a list of some of the types of scenarios where we can automate and define rules which will automatically calculate and post the various adjustments that I need to do my consolidated reporting. So the elimination of all of my intercompany activity, my inter-unit balances, elimination of my dividends that I've paid, but in addition being able to automate other things such as if I have equity method of accounting, being able to pick up the adjustments to my investment, recording of the income. If I dispose of an entity during the period, being able to reverse out the balance sheet automatically but maintain my year-to-date income. All of these things are designed in the system through the definition of rules such that we can automate all of these calculations so that there is no manual calculations required. Instead, it's automated, speeding up the process and also ensuring that no errors occur in those calculations. Another area that's been added recently, and this has been focused probably more on the financial services area, is also, in order to meet Federal Reserve requirements, the ability to do parent company only reporting with investments at equity. So this is the alternative to doing consolidated reporting, where there is a requirement to have standalone parent company statements, but accounting for all of the investments at equity rather than cost, and this is another option to be automated and handled through the consolidation application itself. Then another key thing in terms of basically this whole area of being able to orchestrate and optimize the consolidation process is to have appropriate monitoring capabilities. So this is another area that has been very much focused on within the application, is to have one single centralized monitor where it is possible to go in and see exactly where I am in the consolidation process at any point in time, who submitted their data, who hasn't submitted their data, whose data has been validated and signed off on, what were the results of my currency translation, my elimination of investments, all of these things. And this sort of capability is key to really being able to orchestrate and manage effectively the consolidation process. Now, tied to this also in terms of reducing the time to close and being able to also facilitate the ability to run multiple consolidations, even day on day, in order to allow me to really start pushing all of my adjustments back to posting at source rather than having to carry them in the consolidation system and then manually handle them afterwards, is the concept of being able to basically run what we call incremental consolidations, where the application will only reconsolidate on changed units after the first application, after the first run, making it much faster, but also supporting parallel processing for very high volumes of data, or where we want to have multi-dimensional data, so that from a management perspective, I can not only report on legal entity and account, but be able to get down to lines of business, segments, profit centers, et cetera, within that reporting. Then the last area, of course, is the ability to be able to do reporting. So the BPC application has its own native reporting capabilities, which will basically allow us to do our reporting real time. As soon as the data is consolidated, it's immediately available to be rendered in reporting. We deliver what we call starter kits, which include numerous different predefined reports, which can be used as templates for creating your own unique reports, covering all of the standard and most important reports, but also being able to render these through various different types of user interaction through Excel, hosted in Excel, through the web, or making them available on mobile devices as well. So that really covers the key capabilities of the consolidation application. So now what I'd like to do is just briefly go in and deliver a short demonstration of some of these key capabilities, in particular those areas that focus on things such as being able to allow us to accelerate and to improve the quality of the close and ensure the consistency and accuracy of the data. So what I'd now like to go into is basically this is our SAP Business Planning and Consolidations application. And this is the application we referred to earlier, which is a unified planning, consolidation, and financial reporting application. So what I'd like to take people through are sort of three key areas that normally are involved in the close. The first of these is the preparation to actually perform the consolidation each period, and we'll briefly look at some of the capabilities there. Then in this scenario, what we're dealing with is a distributed environment where each of the various different reporting entities or regions is responsible for being able to essentially extract the data that they want to submit for consolidation purposes, to validate that data, to adjust it, and then to be able to sign off on that data and transfer it to corporate, signed off indicating that it's now ready to be processed. Then in the third step, we'll go to what corporate is going to be doing when they run the consolidation once they've monitored and ensured that all of the various different entities have done the activities they need to perform. Now, there is no requirement that we have to use this distributed model. We do also have the option of course, setting it up and running it through a central consolidation process. But just to show some of the key capabilities, we will take an approach of a distributed environment where each of the entities does submit its own data, and then corporate takes that data once it's complete and finishes the consolidation and makes the data available. So within the application there is a dedicated area known as the Consolidation Central. The Consolidation Central basically contains the key activities that the people responsible for performing the consolidation application are required to perform. So prior to actually running my consolidation each month, normally the business or corporate would go in and they make certain adjustments to the system to prepare for the consolidation. So in this case, for example, I'm going to go into my ownership manager to begin with. And what I'll see within this ownership manager application is basically where I go in and define the various different hierarchical structures that I want to report upon. So here I can go in and I can basically build alternative consolidation hierarchies. For example, for statutory reporting, my ownership structure, I could then build an alternate roll-up based on region or line of business for management purposes, etc. But from within here, we're able to basically define these are the various different groups and subgroups I need to be able to consolidate and report upon. Here's the method of accounting that needs to be applied to each of these units. And this will drive out all of those automated calculations that we talked about based on what method of accounting needs to be applied. So if it's full or acquisition method, this is where we would deal with, for example, if I have minority interest, the calculations of those non-controlling interests. it was proportionate, backing out the proportionate areas. If it's equity, knowing that it needs to only pick up the impact on the investment and the P&L accounts. Each of these things is handled through this process, and then I have the ability to define the actual percentages that I want to apply. So through this here, again, I can go in, I can define by what we call the category. So if I have different accounting methods for IFRS versus US GAAP, I can create two categories, one for my IFRS reporting, one for my US GAAP, applying the different methods. The base data I'm working with, again, is always the same data. It's just the rules that are going to be applied that would then vary by the accounting principle. I then have the ability to define these on a time-dependent basis, and this basically allows me to support historical or as was reporting as well as being able to support as is. So for statutory reporting, being able to report prior periods based on the existing ownership structure at the time I reported upon it. For management, being able to restate that information based on the current structure within the organization. And then, as I mentioned, the ability to be able to create alternative hierarchies to support not only legal and statutory by ownership, but my roll-ups by line of business, et cetera, within the organization. Okay. Now, once I go through and do these various different activities, such as the definition of my hierarchies and my setup, then the next area we would set up the system. We would then go into carrying out the various different close processes themselves. And what we're looking at here now is basically what is known as the business process flow capabilities within SAP. And this is really where we have the ability to go in and define for each user within the system the individual activities they need to perform. But not only does that control within here, it also controls what activities are sequenced. So, for example, we'll see that certain activities are pending on completion of other activities. And this is also where we're able to tie in our status management in order to control the automated sign-off of the various different activities, etc. So in the first step here, we can see that all of the entities except for Austria have now completed all of their activities in terms of preparing their data, submitting it, validating it, and signing off for corporate to consolidate. Austria, however, is still open, and we can see from within here that whoever is responsible for Austria, when they go into the system, they will immediately see that they still have activities to perform. So as Austria, I could go in, I would select here, and then what we're able to define within here are all of the individual steps that each of the users needs to be able to perform. So for example, in this case, the local entity needs to be able to load their data. They then may need to add supplemental information. For example, I may load my fixed asset balances for my general ledger, but need to break those out by individual activity so I can create input forms for that. They would then run the validation checks on the data, run the various reports they need to ensure their data is correct, and in the final step in the process, they're going to do what is called updating the work status, or it's essentially triggering workflow notification to corporate that they have done all of their activities and they're officially signing off on the results and saying these items are ready for processing. So in this case, the data has actually been loaded for this application. So what I want to do now is to go in and say the next step is to run the validations. So I can select the validations, and what I would see within here is what is called the validation monitor. And when I run my controls on the data within here, essentially what it's going to do is it's going to go through and run all of these predefined checks and balances that I have within the system. And this will check, for example, immediately after loading my data, is it complete, is it accurate, are there any things that need to be followed up, etc. So I can now see that once I run these, there are errors within there. So what I would now want to do is to go in and try and start analyzing these errors. So I can basically go in now and I would be able to scroll down and try and determine where my particular errors exist within here. So if I scroll down, I would see that Austria does have errors in the data that they have submitted. So whoever is now responsible for Austria needs to drill down to understand what those errors are. So now they can drill down, they can select on here, select only the items that failed, and then drill down to see what gave rise to those. So in this case, what it's coming back is we have rules that are basically saying that for each of my fixed asset accounts, the movement between the opening and the closing balance has to equal the breakout by what we call the flows. And the flows essentially represent what the nature of the movements were. So what were my additions, my disposals, my transfers, etc. So from here, they can drill down and they can look into the detail behind here. And what they could actually do is they can then call up a report or an input form which would actually hold the data related to this. So now they can basically access this data, and what they're going to see is someone forgot to provide that breakdown of the flow detail for those accounts. So there's a movement in my fixed assets from the beginning to the end, but nobody said what the nature of it was. So after analyzing, it's determined that these represent additions that were not broken out that way within the system. So I would enter those additions to the system itself. Once I have done that within the system, I would then indicate that I want to save the updated data to the system. It would then run that updated data. Tell me that I've written the data back to the system, and now if I return to my activity detail, I should now be able to rerun those controls and see whether or not I've corrected the problem. So at this point, we would see those failed errors go away, and if I go back and I look at my data now, what I'll see is all of my validations have been performed and corrected. So now, as the person responsible for that particular area now, when I refresh the data, I'll now see that everything is fine. So if I'm responsible for that local data, I've now loaded it, I've validated it. I could then go in and if I chose, make further adjustments if I have topside adjustments. But when I'm through all of these activities and I'm comfortable with the numbers, all of my validations have been checked, etc., I would then go in and update what we call the work status. And this will essentially, when I do this, automatically trigger workflow notification to corporate that I have now completed all of the preparation tasks, I've submitted my data, and I'm signing off to say that the data is now correct and ready for processing. So they would then apply that to the system, exit from here, and at that point corporate is going to receive notification that in fact Austria has now completed its activities. Okay. Now as corporate, if I now go into the system itself, I can now basically once I have that notification know that I'm ready to start the consolidation process. So I would go into the consolidation monitor itself, and now what I would see within here is basically the status of the submission from all of the various different entities. So now I can see that all entities have passed the validation checks and all of their data, so all of the checks and balances have been appropriately passed. For all of the units except Austria, the data has now been submitted and approved. Austria now has the status of data under validation, which means that I have notified, corporate has been notified, but corporate now needs to review and determine whether or not they're prepared to approve the data or to reject it. So corporate would now look at it, they would say all of the validation checks have been passed, everything appears to be fine, so they can now go in and basically update the status. To basically go in and at this point in time say they either approve the submission or they reject it. If they approve the submission within here, they would then go in. I would refresh my status within here, and now I would see at all levels within the organization my data is submitted and approved. If I chose at this point, I could also lock that so that no one can make any further submissions while I'm running the consolidation. Now that I have all of my data in here, I'm able to monitor it. I see that everybody has passed their validations. All data has been submitted and approved. Corporate is now ready to run the consolidation. And now again, what it's going to do is on an automated basis, it's going to do all of the calculations that need to be performed to book all of my currency translation as well as all of the adjustments to eliminate my intercompany activity to account for my non-controlling interests, etc. So I would select the area that I want to be able to run this for, the level I want to run it at, and then I would basically trigger the consolidation itself. Now it basically will go in and it will tell me, okay, if it was the first consolidation, do you want to consolidate all units? Or if it's a subsequent consolidation, do you only want to consolidate on the changed units? So in this case, I would go in and I would say, okay, I'd previously run for the other entities, I only want to run incremental. I would trigger the running of the consolidation itself. Basically, it would then go in, read the data, trigger all of the activities, and then start executing the processes itself. So now I'm able to see that it's running the currency translation process, after which it should immediately trigger, if successful, the elimination of my inter-unit activities, etc., within the system. And then it should return as well the status on all of those various activities to show me what the result of all of those calculations would be. Okay. So that basically provides an overview of sort of the key processing capabilities within the application itself. So again, it's very much designed to automate the end-to-end process, from being able to automate the ability to extract data from my source systems, to commonize that data, to allow for the validation using automated exception-based validation rules, through the submission process with appropriate control and sign-off, through the automated calculation and running of the consolidation activities themselves, resulting ultimately in the full consolidation of my results as a final result. Okay. Now, just briefly as well, as we mentioned, we have various different reporting capabilities within the application itself. So basically, we provide here the ability to run various different consolidated reports, both in Excel as being able to run them in both in a web environment as well. So various different reporting capabilities are also provided within the application to support the processing itself. Okay. So if I go in here, I go to my start page, what I will see here are each of the different reporting front ends and accessing those different alternatives. So if I want to be able to run a report in Excel, I would select the Excel option. And then what I have the ability to do is to basically go in and to call up the various different reports that are available to me, and then to execute those various different reports. And this can include, for example, balance sheets, income statements, cash flow statements, etc. So again, we provide various different reporting capabilities, Excel, web, as well for the web reports, being able to render them via mobile or devices in addition. Okay. So at that point, I think that sort of shows the key activities involved in the processing and some of the key capabilities. Again, really focusing on three areas: ensuring data accuracy through integration and automation. Second, process efficiency through the process management and business process flows, the monitoring, the workflow, and the collaboration. And the third area is the usability and adaptability through delivery of solutions that are basically designed to be owned and managed by the business. So just in summary, I guess some of the key things or takeaways I'd like to note from here is that at all levels within the organization, you have the ability to utilize the application to support not only statutory consolidated reporting, but any regulatory requirements, as well as all of your consolidated corporate management reporting that needs to be done. So this means whether I need to be able to look at my data by legal ownership structure, by line of business, by region, etc. We can either define alternative hierarchies to do that, or we have a multidimensional database structure so that I'm able to basically consolidate and report not only on the entity and the account, but as well by profit centers, by business segments, lines of business, etc. The second thing is that there are very strong collaboration capabilities. So again, as we saw, one of the key facets of a modern application such as this is the ability to provide step-by-step process activities that need to be performed, but tying that in with workflow, collaboration, monitoring, etc., to ensure that we optimize the entire process, that everybody at all levels in the organization is able to see where we are at the process at any point in time, and to be able to address any issues that are identified as soon as we can see the issues within the process itself. Business users increase productivity. Again, all the interactions are either by an intuitive web interface or through working in native Office applications such as Excel or PowerPoint, which are, of course, very familiar to all of the users within the application itself, so easy to learn, and also we see a high level of adoption with them. And then again, as we mentioned, reducing the involvement that IT has to have in activities such as reporting, rules, definition, maintenance of master data, etc., putting that in the hands of the business so that we can react much more quickly during the close process to any changes that are required. Okay. So I think at that point, I just want to mention at the end of the presentation, you will see certain additional materials we have available. So there is an enterprise performance management area available on the SAP website at sap.com under /EPM. As well, there's also a dedicated area for chief financial officers and financial leadership, including various different information around benchmarking of various different activities, etc., where companies want to check their key performance activities, in particular in areas such as process management, etc., against other companies, and that can be found out in the sapcfo.com. And then, of course, social media. This is just a listing of the various different areas that you can follow us on in EPM space. So at that point, I'd like to turn things back over to Ernie, if possible, and proceed with any questions that we may have.
Thank you very much, Kurt, for that great content and your insights. With that, I'm going to go ahead and open the Q&A session. Again, those of you in the audience, I encourage you to please ask questions on today's topic via the questions box in your GoToWebinar control panel. Kurt, first question is around what are you currently seeing in terms of time to close from your existing customer base, and can you also tell us, you know, some of the improvement times that the people have been seeing?
You know, I would say probably best in class we see for companies is a lot of a fair number of companies start to be in the probably I would say the 4 to 6 day closing period range, and that's sort of I think best in those particular areas is probably in that 4 to 6 day range. Certainly, there's still companies out there that may take up to 20 days, but a lot of companies are moving down to where it's probably about a 4 to 6 day close. Now, that doesn't necessarily cover all of my external reporting, but basically being able to close on a periodic basis and provide management with the final results. That's sort of, I think, the best in practice that we see currently.
Okay, great. Next question. I think you mentioned, you know, there are obviously several bottlenecks, you know, in terms of the close process. Can you give us some insights into which of the bottlenecks seems to make the most impact on the close process when those are removed? Some of the common bottlenecks your clients are seeing before they implement the software.
One of the most common bottlenecks we find with a lot of companies, again with global companies in particular, if there's a lot of internal trading, is obviously the whole intercompany reconciliation process. So that can often slow companies down for 2 or 3 days during the close, just trying to resolve the out of balances, etc., that exist between the various different entities. So what we've tried to focus on is providing capabilities within our disclosures, within our EPM close to disclose suite of products of intercompany applications that are designed to essentially allow me to start the process on a peer-to-peer basis in advance of the actual close. So basically being able to transactionally match, identify what transactions in dispute, what are missing, but doing it unit to unit rather than corporate having to gather everything and then go back to the units, try and get those activities done pre-close so that when we get to close we take that 2 or 3 day process out of there. Another key thing we see is more and more companies going to running multiple iterations of the close. So instead of, you know, waiting to day 3 or 4 to do their consolidation, they essentially start consolidating on day 1 or day 2, and then running multiple consolidations per day. The whole idea of being able to continually push out the latest information for people to start analyzing and being able to correct through the whole cycle rather than having to wait till day 3 or 4 before they start seeing the first results. Okay. So I would say those are 2 primary areas top of mind that definitely can impact the closing time itself.
Okay, so to kind of dovetail off that question, so it seems like folks are also using the consolidation software to do some sort of almost pro forma financial statements, partly based on actuals and forecasts. So it gives them the ability to run scenario analysis. Is that correct?
Yeah, I think more and more, even for I think what we traditionally call consolidated flash type reporting, where there are certain key performance items out there that management wants to see very quickly. Things such as how are my sales and my revenues moving against my plan, et cetera, on a consolidated basis, where those sort of things, as we say, we start very early in the process, but sometimes even those things are run before the actual true close itself to start getting at least what's the latest data in the system. And of course, these applications can be run as often as you want. There's no restriction. It's just where you are in terms of the data that you're working with and being aware of what's there and what's not.
Okay, great. Can you speak a little bit to the functionality as far as the audit trail is concerned? Are there reports that can be run by users? That's kind of part A. And part B, are companies giving auditors access to these systems on any level to get them visibility into that consolidation process?
Yeah, I think there are two different types of audit reports normally that we have. One of the key things in the design of the system is we carry a dimension known as the audit ID. And the audit ID is really intended to be a dimension that tells me exactly what the source of the information was. So it basically isolates and says, this is the data as submitted from each of the entities. Here were the adjustments I made at corporate. Here were the impact of eliminations, et cetera. And that's a key element for the auditing of the data, because that's what allows us to, for example, easily reconcile back to, does the GL and the source system correspond with what I'm carrying in my consolidation system? How did I get from what was submitted to what I have as the final result? And normally, the reports, et cetera, that have that kind of analysis are generally made available to the auditors so that they can clearly understand and do the reconciliation and the tying back that they need to do. As well, there are detailed audit reports, and those will actually focus more on activity by activity. What occurred, they're more technical in nature. They will be referenced at certain points in time if necessary, and again, those sort of reports can certainly be made available to the auditors. But again, what we tend to see is we create user authorization profiles for the types of reports that the auditors would need to see, and then we would give them access, but under controlled authorizations to see the particular reports that are specific to what they need to be able to validate.
Okay, great. This might be just a tad bit into the weeds, but can you speak a little bit to the report writing tool that is being used to generate the reports in BPC?
Right. So the report writing tool which is being used is what we refer to as the common office add-in for enterprise performance management. And the reason it's called that is that we use it across multiple different applications, not just BPC. That has the advantage of allowing us to actually go to more than one application to report upon the data. But essentially, it is focused on providing the ability to render through the common office tool of data, but data which is stored in the central database. So essentially, it's a report writer that allows us to go in and to use all of the native capabilities of Excel, but we don't store any of the data. For example, in Excel, it's always being called from the central database and just being rendered in Excel. But that being said, we have full formatting capabilities, full formula calculation capabilities, things such as that. Then in addition, to make it also more of an ad hoc tool as well as an advanced report writing tool, it's enabled with drag and drop capabilities so that somebody who may not be that expert in Excel or just wants a one-off ad hoc report can essentially go into the report builder and essentially drag into the columns what they want to see, what they want in their rows, what they want their selection criteria to be, and it will dynamically bring that data up based on whatever parameters I put in there, for example, what company, etc. So you'll immediately be able to see what the result is, but using drag and drop capabilities, and that's focused more on the occasional user as opposed to maybe the power users that may develop more complex reports using the capabilities both of the EPM add-in as well as Excel. I should also mention that it's not only Excel, we can embed dynamically balances, etc. within PowerPoint presentations and Word documents so that period by period we don't have to cut and paste. It's simply a matter of going in and refreshing the numbers based on the current period, for example, to bring those results back.
Okay, great. I believe you may cover this, but I'll just ask a question again. Do you have the ability to set up alerts out to different individuals who might be kind of holding up the close process in any way? How does that work in terms of functionality?
At the current time, no. It's more that corporate is immediately aware through the monitor. So if corporate were to go into the monitor, they would immediately see, for example, which entities have not submitted their data. That's immediately visible. And then, but today they would basically have to email or contact those units to tell them to get their data in. The unit will also see that they're not submitted, but the main way of monitoring that is the monitor itself will at any point in time show the exact status on the submission from each of the units. But from there, then, corporate would have to directly contact the various different entities and ask them to proceed. And then, of course, they will be given workflow notification when, in fact, the update has occurred. So they will be automatically notified on when that update occurs, but there's nothing to automatically trigger notification back to the entity.
Okay, great. Can you just speak to how this system and other similar applications that SAP offers help kind of what we commonly call the last mile of finance? So it's how these systems facilitate delivering strategic value there.
There are certain limited capabilities within the business planning and consolidation application to help with note authoring and things like that, because we can embed balances and so on within Word documents. But we really have another application called disclosure management, which could be fed from the data from BPC. But the disclosure management application is the application that's really focused on the last mile activities. So that's an application dedicated to allowing us to bring in data from multiple different data sources to ensure we're working with common data, but then to author all of my notes, to do auditing, to track any changes which have been made either to the balances or the notes, and then to consolidate that data and then to render it in multiple different output formats, including Word, PDF, PowerPoint, but as well EDGAR, HTML, XBRL for SEC filings, etc. But all of that functionality is handled by the disclosure management application, which again can be sourced from BPC.
Okay, great. Thank you very much. With that, I'm going to go ahead and close the Q&A session, and we'll coordinate getting any unanswered questions with our speaker today. In closing, a big thank you to Kirk for his time and insights. He's clearly a thought leader in his field and an excellent source of information on today's topic. Note in the post-webinar survey, you'll be asked to prompt it to take right after the webinar concludes. You have the opportunity to express your interest in being connected with Kirk with just a few mouse clicks. Again, thanks to our sponsor, SAP, for their partnership. Quick note that registration for Performer second annual Performer Tech Conference is now open. The conference is all about helping companies take full advantage of the current revolution in corporate finance technology to drive results across the enterprise. And you'll be asked in the post-event survey if you're interested in learning more about Performer Tech. Finally, a big thank you to the audience for your valuable time. We hope to see you again soon at another Performative event or online at www.performative.com. Make the rest of your day great, everyone.
Thank you.